Yes, good morning, students. I hope you can hear me. Assalamu alaikum. Just want to check about my voice. I hope you can hear me. Okay, I just enabled the messages. I hope you can hear me now. Okay, okay. Thank you very much. Thank you, Nasser. Thank you. We'll start class in a few minutes. Let's wait for some more students to join, and then we'll start our class, inshallah. Yes, okay, I'm going to, yes, welcome back. I'm going to upload chapter 2 now. Just wait for a minute. I thought it's there already. I will check. Okay, sorry. Sorry, I started. Okay. You can hear me now? There was a problem. Yes. Okay. Okay, thank you. Yes, can you hear me now? Okay, okay, thank you. I think there was some problem with the sound. Okay, so this is where we stopped in our last class. Financial status for a business, and as we said last time that that after we make different decisions, right, that outcome of those engineering decisions will be reflected in financial statements, and there are different types of financial statements which are prepared in any business organizations using accounting as a language in business. So this is what we looked at a last slide about accounting, which is a language of business. So using this language, we prepare financial statements. These are 4 financial statements. Then next we'll see that why, as an engineer, we need to understand these financial statements. Okay. Now see, this one is for our understanding that why, as an engineer, do we need financial statements. Of course, we'll not be going into detail to know about how to prepare these financial statements, but these are important aspects. Okay. I'm on slide number 13. I hope you can open this one. If on a screen, sometimes it appears very small, the numbers, right? So you can open this assignment. I already uploaded on a Blackboard. The same assignment is there uploaded. Right. Now, why do engineers need to understand financial statements? Remember that as managers, you need to make decisions. What are those decisions? Anyone in the management will be making those decisions. They'll be making decisions about operating decisions. What is operating decisions is about day-to-day operations, everyday operations, just normal maintenance, normal production, management of the company, day-to-day operations. The daily activities is operating decisions. Okay, so these are the decisions made by the management or investment decisions, whether to open a new factory or to start a new product, right? Whether to purchase new plant, for example. So these decisions are there, but it's not every day. This investment decisions maybe once in a year, right? Or maybe twice in a year. These are not daily decisions. Operating decisions are made every day. Purchase of a material, payment to the suppliers. So all these one are operations, and investment decisions or the decisions which is not made every day, occasionally, where to invest to start a new factory. And then financing decision, how to arrange for the money. If we don't have enough money for opening a new factory in Ras Al Khair, for example, right? So how we are going to arrange? Are we going to issue the shares, or are we going to take a loan from a bank? These are the decisions made by management. Anyone in the top management will be making these three types of decisions always. Now, as an engineer, if you look at a right box here, so you have to provide your feedback to management, right? You have to provide your feedback on evaluation of those capital expenditures related to projects, which type of equipment you are going to recommend as an engineer, what should be in the plant, right? Evaluation of capital expenditures. Capital expenditures means expenditures on something which are going to last for many years, it's going to stay there in a business for next 10 years, 20 years, right? These are the capital expenditures. So you provide your feedback whether to purchase CNC lathe machine or manual lathe machines because of their cost, right? And what is the correct production method should be used by the management, your assessment as an engineer, right? Then also you provide a feedback on safety and environmental impact of engineering decisions, which type of products to be produced, which are more profitable, which are not profitable. So these decisions, these things, you provide your input to the management, right? And then also those who are making decisions, they also need to consider the external situations as well, external constraints. External means outside of the company, maybe regulations by the government about environment, right? About different laws, about workplace safety laws, community, right? So there are external constraints. So management has the information, both feedback from you about the technical details, some information from external constraints, right? So based on this one, they make decisions. These three types of decisions will be made after receiving your feedback. And after they make those decisions, right, they purchase an equipment, uh, or they start a new factory, right? So as a result, there are so many different transactions happening. So those transactions will be captured by our accounting information system. As a result, they will produce balance sheet, income statement, and cash flow statement. These statements are prepared or you can say these are the outcome of decisions made by management here by taking your feedback. So if you know whether these decisions and your suggestions are giving the results what were expected, you look at these statements, right? And then these are the actual one, and the management compare this one with the expected financial performance. These are the actual one, and these are what expected financial performance. What was the expectation, right? What was the expectation about purchasing of a CNC lathe machine, or what was the expectation about purchasing of new factory, right? And then they will have an expected profitability. You compare your profit, the expected one, with the actual one, right? What are the different timings of cash flow? How much cash we received for payment of interest, how much cash we received for a purchase of a plant, or these all expense cash flows means availability of cash flows, right? Payment to suppliers. So these were all available expected with the risk as well. What was the risk? So all this one, this is how people react in the market, right? So as an investor, they expected what is the financial performance, right? What they expect. If you provide a good profit, right? Expected profitability is high. They have the dividend received by the shareholder is this is what they expect, right? And with low risk. So of course, with all these things, it will be reflected in the market value of the firm. Remember last time we discussed market value is stock price multiplied by total number of shares. So this will be reflected in the market. If your investors are happy about your decisions, firm's value will increase. So this is the relationship, that how different roles will be affected, and at the end what is the impact on stock price. So you can see here, as an engineer, you provide a very important role by providing these advices by your services. So this is what, as an engineer, role you played, so that at the end it is reflected in the firm's market value. This on the next slide. This is just an example of SAFCO's financial statement. Slide number 14. This is a financial statement of SAFCO, right? If you look at this one, I just highlighted some information there. Now, this is an example. You can see here, for example, the first one, October to December 2016. So this one is a financial statement or income statement for 3 months. Income statement you can prepare for 3 months or for 6 months or for 1 year, right? It basically just summarize the result of 3 months, or it summarize the results for 1 year. There are different formats. If you look at the second column, 2015, right? This is for the same period last year, right? And if you look at the third column for the 12-month period, this is for 2016. This is for a full 1 year. What is the performance of SAFCO in a full 1 year? Right. Just like you have your in your academic transcript, you have semester GPA and you have cumulative. Cumulative is the total of all of your previous year. But here we have normally a maximum a year, 3 months in first column, right? And for 1 year in the third column, 2016, right? And also I highlighted gross profit, some terminologies. What is a gross profit? Now, what is gross profit? So there are some terminologies you need to understand. Gross profit is sales minus cost of sales, right? Sales minus cost of sales is the gross profit. Sales is when you sell something, right, is a sales. Cost of sales is the cost of producing that product, whatever it is, right, without taking the cost of administration and other things, right? General and administrative expenses, rent, these are all after it, right? So just to see a gross profit, right? Why we need a gross profit? Because this is what, as an engineer, you can control. Imagine you are working in a company where you have an admin expenses about accounting department, marketing department. You have nothing to do it. You cannot control those costs because it is not in your hand. What you can control is cost of sales, the production under, let's say, your supervision, which is what type of material you use, the cost of labors, right? That is a cost of sales. Sales minus cost of sales is a gross profit. We'll see more detail later on. This is just one example which I'm showing you that in a real life, all companies are required to prepare these financial statements, and financial statements are available on Tadawul, on especially for public corporations. It is mentioned there. This is on next slide is a balance sheet. Now, balance sheet is another financial statement. It tells us about how much assets this organization have, right? If you look at here, I highlighted first one, the this one, the circle one, which is total assets. I'm on the next slide now. Okay, I'll update. Yes, I'm on the next slide. This one updated. Slide number 15. On this slide, you have total assets. Total assets are classified as current asset and non-current asset, right? Under current assets, you have cash and cash equivalents, account receivable. This is, you have total of current assets means total of these items. Then you have non-current assets. I'll explain in next few slides about the detail. But this is in a real life example that it is something real. What we are showing to you is real, existing, and all the companies has to prepare this one, right? So total assets, then you have total shareholders equity. We call it the equity contributed by shareholders, by owners. Sometimes we call it owners capital as well. Rasalmal or owners capital, this is same thing. So assets is total assets equal to, second column we have liabilities, current and non-current liabilities, right? Total liabilities and total shareholders equity. This should be same. If you look at a last item here, total liabilities and shareholders equity, it is same as the total asset. There is an equation which I will discuss now in the next few slides. Yes. So coming to the balance sheet now. What I have shown you, that was a balance sheet example. Now how it is prepared, we'll explain now. Okay. What is capital, right? And we'll see about the liquidity, all this information now. Yes. Now, for balance sheet presentation, we follow this equation. What is the equation? Assets equal to liabilities plus owners equity. And what is assets? It is resources of businesses, and they are listed in the order of liquidity. I've shown you the one example of Safco's balance sheet. There were assets listed, right? Those were what we call it resources of business. They were listed as current assets. Now, what is a current assets? Those assets which are used by the business within a year, right? What they are? They are cash. Cash means, the money you have in your pocket or in your bank account. Account receivable. What is account receivable? In businesses, when we sell anything on credit means you sell something and customer don't pay you cash, right? Customer will pay you cash after 3 months or after 1 month, whatever your credit terms. So it is not a cash, but it's like a cash, right? So if this is what we call it, the amount of money you are going to receive, right? Or we can say when you sell something on credit, it is account receivable and it is your asset because it is just like a cash, but still it's not cash because cash is not in your pocket. You are going to receive it and we classify it as a current assets. Then the next item you have is inventory. Inventory is the stock which you are going to sell to final customer. If you are selling, let's say, laptop as an example or mobiles, so the number of mobiles you have in your warehouse, in your mastauda, in your stock, it is inventory. Okay, inventory is the stock which you are going to sell it to the customer, not you are going to use into a business. Anything which you are going to use, that is something else, right? That we call it equipment, we'll see it. But this inventory is for customer, you are going to sell it, you are not going to use it in a business, it is for sale. Then next type of classification is long-term asset or fixed asset or non-current assets. There are different names. Okay, so the name is I'll just mention here something if it's clear. The another name is non-current, right? Long-term asset, or we call it fixed assets. Right? This is just a name. Non-current or fixed assets or plant and equipment. There is just different names. So familiarize yourself with these terminologies. Now, what is included in long-term or fixed assets or non-current assets, right? Land is the one item. What is a land? Earth, right? Land. Then you have building. Why we call them non-current asset or fixed asset? Because they're going to stay in a business for long period of time, maybe 10 years, 20, 30 years, right? You have a building, right? It may going to stay for next 20, 30 years. Equipment, you have your plant, machinery, CNC machines. These are all part of equipment, right? And this is a plant, right? A production plant you have. These are all assets because you spend money on it. These are the resources of the business. But we put it, just for your understanding, we put it in financial statements in a different section. This is the purpose, just for a user to understand the information. And for non-current or fixed asset, we have another concept, we call it depreciation. Yes, mouse is there. Can you see it? Yes, Ahmed. Normally I use the mouse. Is it there? I can see my mouse. I don't know. Okay, I'm going to highlight. Okay. Okay, now I'm using highlighter now. Is it, can you see it now? Okay. Okay, okay. So okay, thank you for, so long led building equipment, right? And there is a concept with fixed asset which is called depreciation, right? Now, what is the depreciation? Do you have any idea about depreciation? Even type and let me know any idea about depreciation. Okay, no problem. So what is depreciation? Now I'll explain what is a depreciation. I'm going to share my screen with you and I'll explain to you something very important about depreciation which you going to need it. Yes, yes, Ahmed, decreasing of the value. Yes. Now I'm sharing here my screen with you. Just to explain a depreciation, I can give you an example of car which you purchase, cost of car, for example, or purchase value, right? You purchase a car, let's say in 2018, as an example, right? For amount of, let's say, 100,000. This is, we can say, you purchase a car for $100,000 or reals, right? Yeah. And you purchase in 2016, right? Now we are into, let's say, we are in 2020. Let's say 2000. We purchase a car for 100,000. Today is 2020. What is the value of this car? Is it same 100,000? Yes. Can someone tell me? Is it same? Yes, it's not, right? Why it is not? Do you know why value is less? Can someone tell me why the value is less? Yes, the car is not new. Okay, because it has been used, right? With the time, value of fixed asset. Now I will use the word, yes, in terms of engineering economics. Okay. Now, yes, because your old car has been used, right? If you are an engineer, you know that because of corrosion, because of usage, right? The functionality may reduce, right, with the passage of time. Now, yes, so this reduction in value, we call it a depreciation. Let's say how we are going to calculate it. I will show you. Cost of the car is this one. Now there is a how we calculate, first of all, depreciation. This is what we call it, depreciation. To calculate a depreciation, we don't know how much value of the car reduced every year, right? So whenever we purchase a car or equipment, normally this is, remember, very important concept, we calculate a depreciation for fixed assets or for non-current assets. Inventory is not going to depreciate. There is no depreciation for inventory. Depreciation is for building, for plant, for equipment, those fixed assets. Okay. Now, how do we calculate a depreciation? For depreciation, we need to know what is the life of asset. This is what you have to estimate it from the beginning, right? Life of assets, right? What is the life of asset? Let's say we said that life of this car is 10 years as an example, right? 10 years is the life, right? Means life of car. That after 10 years, let's see, we say that it will have a zero value. We assume here, just to make it simple. Of course, we can sell it in haraj, have something that is, we'll discuss it later on. But here we assume it has, after 10 years, it will have a zero value. So now, if you are in, the cost of the car in 2016 is how much? 100,000 we purchased today. What will be the value in 2017? Can someone tell me? As you said, 80,000. Muhammad, yes. Anyone else? Any answer? Okay. Yes, someone said 90, 75. Okay. See, in 2017, when you prepare your statement, you say same thing. You'll write it same thing. 100,000. Cost is same. The purchase value is same. In 2018, it is same. Same. What you need now here, first of all, you need to know what is the depreciation. How much every year it will depreciate, right? We call it annual depreciation. What is the annual depreciation? Every year, what is the depreciation? We know, very simple. We can this one divided by 10. So basically, our depreciation is 10,000, right? This is that every year value of our cost, sorry, our car will reduce, right? So this is what we call it annual depreciation, which is, yes, I'll answer your question. Just a minute. I'll show you. So every year, this is the depreciation. Now, if someone wants to purchase your car in 2016, what should be the value of car? Yes, it is 90,000. Yes, Musab. How to make speaker? I don't get your answer, Abdullah. Your question, Abdullah Hussain and Ahmed Ibrahim. Okay, just first understand this one. Let me finish this depreciation, and then I'll take your questions. My Excel screen is visible to you? Okay, okay, clear. Okay, yes. Now, what we see here is that every year there's a depreciation. Our value of our car will reduce by 10,000. Let's say in 2016, what is the value of your car? Of course, it is 90,000. What will be the value of car in 2017? Of course, it will be 100 minus 20. It is 80,000, right? So why? Now what we need is our accumulated depreciation, total depreciation every year. In year one, our total depreciation is 10,000. So value of our car is 100 minus is 90. This is the value of our car, right? This is what we think based on our usage. What is in the market when we go and sell it in Haraj, that is something else. That is a market value. Now this one, understand, in accounting, when we purchase our asset as of today, because we don't know what will be in the market, so we assess that based on our feedback from engineers, not only for cars, for equipment, for machines, for machinery. You as an engineer, you said that okay, life of this asset is 10 years. It could be car. Imagine a car, just as an example. In real life, it could be plant, it could be building, it could be some equipment, life of a CNC lathe machines, those things, right? So it is 10 years. Who gave this information? From engineers, right? Life of asset is not known by the accountant, right? It is from the engineers. Okay. Now, based on this one, then we calculated our annual depreciation, that every year, because here we are assuming a time of 10,000. So every year when we show the value of our asset, value of our car, let's say, right? And when we prepare a balance sheet of 2016 here, we said, okay, in 2016, when we prepare our balance sheet, you put all the assets. This was your value of car, 90,000. But how you will show it? You will show it 100 minus total depreciation of 10,000 is 90. So that any user, he can see, okay, we purchased this car for 100, 10 is depreciated, now it is 90. This is how you should present in a balance sheet. For 2017, we know that it is 100 minus 20, right? But what is 20? So first we need a total depreciation. What is a total depreciation, right? Which is depreciation of 2017 plus depreciation of last depreciation for previous year. So now total depreciation is 20,000, right? So value of our car will be 80,000, right? Similarly, when we continue to the next one, our total depreciation, total means for previous 2 years as well as 2018, we know it is 30,000, right? Which is this previous total of 20 plus 10 of this year, so it is 30,000. So now value of our car is 70,000. In 2019, our total depreciation is, or we call it accumulated depreciation, which is 30 plus, right? So equal to 40 plus. So we'll continue like this one. It will be 50 and 6, right? And we keep on continuing until we reach 2026, right? In 2026, value of the car will be 0. For example, I'm just writing here in 2026. If we continue doing like this one, right? So our value of the car will be 0 by, right? It will have a 0 value. Okay, means that asset has been fully depreciated. So whenever you prepare a financial statements balance sheet, you show them the value of car both. You will show your cost, this number, and you will show this number, right? So that any user can see, right? What was the cost, what was the total depreciation, what is the value of asset now. This is what we call it depreciation. This is very important concept. Just remember this example, right? Okay, so clear. Now I'm going to take questions. If anyone has a question, I'm going to disable this and going to show you my slide now. And I'm going to enable the voice as well. If you have any question, please feel free to ask a question. Yes, any question? Yes, Musab. Any question now? Okay, it will be more clear when I continue this one after this slide. So this is our depreciation. Let me finish this slide and then we'll take a break. So then we have some other assets, right? So this concept of depreciation is, right, the concept of depreciation, it is only for fixed assets, right? Basically it is an accounting process for gradual conversion of fixed assets into the expense, right? We'll see it. I'll explain more. I just explain in a normal sense, then we'll see it in terms of accounting, how we deal with the depreciation. Also, there is a one complete chapter. Chapter number 9 is about depreciation, which you will study in more detail about depreciation in chapter number 9. This was just a main idea. Now, liabilities are claims or obligations, right? Similarly, you have assets, but some assets are purchased on hisab, on account. You did not pay. Let's say you purchase computers from Jareer, but you did not pay money, right? So you purchase those assets, so you have liabilities, right? Means your claims on those assets. The assets which you purchased before are on credit, right? You did not pay it. So Jareer has the right to claim those assets, right? This is what we call it liabilities. And these liabilities are listed in the order of payment. Which one you are going to pay within a year, we are going to call them current liabilities, right? These which we are going to pay within a year, we call them account payable or note payable, right? Or salaries payable, taxes payable. Payable means it is due but you did not pay it. Account payable means when you purchase something from your supplier. Normally, account payable is from your supplier. You purchase an equipment, you purchase a material, but you did not pay. You said you are going to pay it after 1 month or after 6 months or after 3 months. This is account payable, just a name. Note payable is also similar to account payable, but it is kind of a written agreement, especially when you take a loan, right? Normally, when you take a loan, you sign an agreement, there is a contract, you must pay it. If you don't pay it, there are certain conditions. So this is what we call it note payable, just a different name. Salaries payable. Salaries payable means the amount of salaries which were due for your customer, but you did, for your employees, you did not pay for some reasons. Let's say the time when you prepare your financial statement, there were some due salaries, but you did not pay. So it is, we call it a salaries payable. It's a liability on you. Or taxes payable. Taxes were due to the government, but you did not pay it. You say you will pay it after 1 month or something, right? Or we have a long-term liabilities, which are mm, any obligation which you are going to pay it more than 1 year. It could be account payable, note payable, or bonds, or long-term notes payable. These are what we call it long-term loans. Loans which you are going to return in next 5 year, 10 year. This is, we call it long-term liabilities, right? And this is the last section of shareholders equity or capital by the owners claims on the business, which is, it could be stocks, you sold your shares, right? In case of Aramco, or there is a paid up capital, there is a treasury stocks, and there is a retained earning. I'll come back to this again when we solve our next question on exercises, as well as I'll explain again after the break. So now we are going to take a break for 10 minutes, and I'll come back to this slide, and I'm going to solve maybe one question from exercise as well. So make sure you have a copy of your book with you as well. Okay. So we are going to take a break. In the meantime, if anyone has a question, please type your question here. Or those who want to take a break for 10 minutes, you can take a break. Thank you. Saad, no. Asset does not mean the quality time of a product. Asset means the resources of, right? Resource of a business, building, equipment, resource of the business which we are going to use in a business, right? If you have to sell cars, as an example, let's say you are selling cars, right? You are in Toyota, for example, they manufacture cars, right? So in order to produce cars, what you need? You need you need machines, you need building. These are all assets, right? In order to produce or to manufacture goods, what you need? Those are the assets. Is it clear, Saad? Yes, Saad, are you there? Is it clear? Okay, okay, thank you. In business, most of the sales are on credit. Remember, in business, normally, let's say you are working in Safco, for example. You are an engineer in Safco, yes, you are working in Safco, right? And you sell it to a customer in China, they will not give you a cash. Remember, it's not that you buy and take cash immediately. I'm on slide number 17. Yes, yes. Uh, I'm on slide number 17. Just informal discussion with someone if they have a question. So Saad asked a question. That's why I'm speaking to him. Okay. I'm not explaining any side, just a formal discussion about this slide number 17. Okay. So why we sell something when we don't take in money immediately? In business, this is how it works. You don't take money immediately. You are always selling on credit. Customer will not pay you immediately. They will pay you after 1 or 3 months. It is a common business practices to sell on credit. Just like you purchase a material from your supplier on credit, you sell as well on credit. This is a common business practices. Normally it is 3 months. Within a 3 months your customer has to pay you. It is same thing, just like when you use your credit card. Using your credit card, you are not paying immediately, right? It's a credit sales when you use your credit card, right? You don't pay your cash immediately, right? So what is the benefit? You know it. The same concept here. Yes, Musab Al-Harbi, about depreciation. Depreciation rate is, for time being, it is constant. The example which I explain you, but in real life there are so many method of depreciation. It can be changing as well, depreciation rate. It depends on the method you are using. More detail we will discuss about depreciation in chapter number 9. There are other methods of depreciation. What I have shown you was the one method which is very simple for explanation. In real life, there are so many other different depreciation method. So rate of depreciation could be changing as well. Yes, Musab, I was answering your question. Okay, so let's take a break, right? And then we'll start, inshallah, after 5 minutes. Yes, we are going to start now. Yes, are you listening to me? Yes, students, are you back? Okay. Yes, I'll explain these concepts again. I know this is you're listening it for the first time, so I'm going to explain these concepts again with some exercises. So what I'm going to do is now I'm going to solve exercise 2.1. Right. Exercise 2.1 on page number 76 on your books. So I'm going to share my screen with you now. Yes. So can you see the book now? Question 2.1. My screen is clear with you. Okay. Now if you look at, so I'll close this one. Okay. Now exercise 2.1. It says consider the balance sheet entries for War Eagle Corporation in table 2.1, and part A says compute the firm's current assets. So what is table 2.1 is this one. Now this table is given and you have to calculate the amount of current assets. How do we calculate a current assets? First of all, we need to understand what are the current assets, right? If we know what are the current assets, then solving is very easy, right? So you look at all these items here. The question says, what are the current assets? We know that we'll be looking only in this section here, only this section, right? I, right. So only this section is about assets. The one I have highlighted is all about assets. But the question says, what are the total current assets? Current means assets whose life is less than a year, right? Now, what are those assets? We look them and I'll explain those concepts again here one by one. First one is cash. Cash is current asset. Remember always cash is current assets. Then there is a concept called marketable securities. Marketable securities means you as a company, right? Imagine some companies also they purchase shares of other companies. Let's say it is you are in a Safco company, right? And Safco companies they purchase shares of Aramco for investment, right? So those shares we call them marketable securities. If because you had an extra money in Safco, right? Remember we say if you remember the previous chapter, we said that after spending money on salaries, on paying to your suppliers, whatever, if you have some extra money left, you can invest it. So imagine that you have invested here in Safco, right? You invested that extra money, that investment on purchasing the shares of Aramco. That one will be listed here. We call them marketable securities. They are also similar to cash because you can sell them anytime. They are not still cash, right? Shares, but you can go online on the double and you can sell it, right? So this one is like a cash, so you can convert anytime. So this is also part of current assets. So marketable securities. Sometimes just listen carefully. In some questions you may see instead of this one short-term investment. This is just another name for this one. Short-term investment. Also another name for marketable securities. Note it down, very important. Then, so this is also current asset. Account receivable, right, is means that when you sell something to a customer and they did not pay it, this is the amount 150,000. Account receivable is also current assets. Inventories, inventories which you are going to sell it to your customers, right? Those things, whatever you're selling. Let's say in Safco, you are selling fertilizer. So your warehouse, whatever the amount of fertilizer you have, those things which are ready to be sold to customers, we call them inventory. And inventory is 50,000. This is also current assets, right? Then this one is prepaid taxes and insurance. Now this one you need to understand. Prepaid, right? Or we call it sometimes advance payment. Prepaid taxes, prepaid insurance, prepaid rent, ijar, or prepaid insurance. What do you mean by prepaid insurance? Imagine today, right now, you go to Taawaniya and purchase an insurance, right, for next year. It is kind of an expense right now, but at this point in time, you pay money, you purchase insurance, it becomes an asset right now because still you did not use your insurance. It is unused insurance, remember. Of course, they will not take you, give you money back, but in terms of accounting, it is prepayment. You will use the insurance for in a whole year. Similarly, just like a rent, when you pay rent in advance, right? Let's say today you pay a rent for a next full month. So today it is your asset as of now because in accounting still you did not live there, right? You did not use the rent. So this type of expenses, it is an expense, remember. The word is prepaid. Whenever you see the word prepaid, this is very important. It is an asset. Prepaid rent is asset, your resource, prepaid or advances. This is very important. So it is part of all prepayments. I'm using the word again. All prepayments, remember, very important. All prepayments are current assets. It could be prepaid rent, it could be prepaid insurance, it could be prepaid whatever, prepayment, advance payment. These are all current assets. Note it down. Write it down. It's very important because solving questions is very easy. Remember, you need to understand. Okay, so these are all current assets. Next one, we look at a manufacturing plant at a cost. Now for this one, manufacturing plant, it is a long-term asset. Remember, plant is a long-term. Now, in order to understand this entry, imagine this entry of the car, which I explained with you, right? At a cost, or a car at a cost, or plant 600 minus total depreciation or accumulated depreciation. 6 minus 100,000, this is the value of the net fixed asset value is 500,000. This is similar to what we have explained here. See, 100 minus 10 or 100 minus 20, right? This 100 minus 20 is 80,000. The same way it is written here in this example. 600 minus 100 is 500. So don't add this one again. So in this column, this is from, so anyone, you can see from here, this plant was built at a cost of 600. Now 100,000 has been depreciated. So value of this plant or net fixed asset is 500. So this is a net fixed asset. It is not part of current asset. Remember, it is part of long-term asset. Goodwill is 20,000. Now what is a goodwill? I'll explain to you. I'm explaining goodwill. Yes, sound I think is okay with me. Anyone else has anyone? Yes. Yes, for me sound is okay. For those who are problem with the sound, you can listen to the recording again. It will be available. Sound is there, okay with me. So later on, you can again listen to the recording. If you miss something, you can find out from there. Now, what is a goodwill? Understand this one. Goodwill is asset as well. What do you mean by goodwill? Remember, we said previous that there is something called a market value, right? If you remember on previous slides, on previous market value, right? I'll explain what is a market, just to show you if you don't remember. This is, yes, if you remember this slide here, the market value, right? Now, what is the market value of Aram? Let's say it is 1.73 trillion US dollars, right? As an example, right? And Safco decided to purchase, let's say, I will just write 1.73 trillion, right? Now, Safco wants to purchase Aramco, let's say. They want to purchase the whole company, Sherika, right? Right? They want to purchase. And Aramco said, no, no, we are not going to sell at 1.73 trillion. This is what we have. If you want to purchase, you have to pay us 2 trillion, as an example. So Safco pay money more than what should be in the market value. This is not everyday situation, right? Maybe once when you purchase a business, the whole company, right? So how much Safco pays is 2 trillion. So the difference here, why they pay more than this? Because of Aramco's reputation, their brand name, their high quality products, whatever, right? So you pay extra amount of, if you add a difference, okay, sorry, this is, so is kind of, I'll just write the number here, 0.27 trillion, right? The difference between this and this, right? So Safco pays a goodwill of 0.27 trillion. So when Safco prepare their balance sheet, they will mention this one there. Goodwill, right, of 0.27 trillion. That why they paid, so that any user can see. Actually, there is a detail as well. When you look at their financial statement, you'll find out, okay, you'll read it here, and there is a detail. They tell us, okay, since they purchased Aramco for 2 million and by paying extra, so this was the goodwill, and they will show it in their financial statement, in their balance sheet. So that's why here you have a goodwill for this example company. So goodwill is part of non-current asset. It's not part of current asset. Okay. Is it clear what is a goodwill? Yes. Okay. So I'm mentioning those concepts again on that slide. Okay. So now the question here, if you go back to question, what is the current assets? Can you calculate from here current assets? From this slide, what are the current assets? Only if you know it. This one is current asset, this one is current asset, this one is current asset, this one and this one. So if you add all these 1 2 3 4 5 items, that's it. This is the answer of part A. Okay. So here it was given in a sequence, but sometimes in exams you may not have in a same sequence. Cash is last item here, this one here. There could be a shuffling of these terms. So but you should know it, right? How to arrange them. So solving is easy. Okay. So part A is done, right? I'll explain as well. Part B says what are, sorry, in part A, this is first, which we already know it, current asset. Now we'll see what is the current liabilities, right? It says what is the current liabilities. You come back here in the liability section. So our answer lies somewhere here. So we'll be looking only in these items, right? So liabilities. The question says what are the current liabilities? Maybe first time you may not be familiar with these terminologies, but when you solve and practice again and again, it will become easy. Now, what is a note? The current liabilities, right? Now, current liabilities are first item is note payable. Note payable is like a loan which you take it, and but it's a written promise. So note payable is part of current liabilities. Account payable is the amount of money you need to pay to your supplier when you purchase a material on account, or you purchase an equipment on account. Means on account means you will pay them later on, right? This is what we call it, account payable. This is also a current liabilities. Income taxes payable. Income tax or sales tax, the riba, whatever you say, you did not pay to the government. There are certain ways where you can delay your tax payment. If you delay your tax payment, you did not pay it, it becomes your liability payable. So these are all current liabilities. Especially note down for this one, note payable. Sometimes later on you'll see it. Note payable, sometimes it's a long-term note payable as well, that it is payable after 2 years, after 3 years. Then it becomes long-term liability. Same name, but if payment date is mentioned more than a year, then it is long-term. You put it in a different section. But right now, without anything, if it is written like this one, it is current liability. If it says long term something, like in this one, long term mortgage bonds. So long term means more than a year. So it means it's a long term liability, or we call it non current liability. What is mortgage? I will explain. Mortgage means real estate, a car, the loan or sukuk or the bonds issued for purchase of real estate. Long term mortgage bonds, mortgage, right? So we'll explain also later on more detail, but still right now it is not part of current liabilities. Long-term mortgage bonds, normally for real estate, it is for 20, 30 years. So you put it in second section. Okay. So this is also not current liabilities. So these 1, 2, 3 are our current liabilities. Now I'll explain another concept here. Preferred stock, which is 6%. 100 par value, 1000 shares. I'll explain what is preferred stock. First, you need to understand what is preferred stock. You say the same one. There is a terms we call it common stock, right? And there is preferred stock. Stock means here not the stock of inventory, it is shares. This is the terminologies used in the US, because our book is US. So common stock is shares, remember, and preferred stock. Let's say I will use the word Aramco's common stock, right? We all have, or most of us have Aramco's common stock, shares. Aramco's shares, the exact word is Aramco's common stocks, not Aramco shares. It is Aramco's common stock you have, right? And there is a preferred stock. What is the difference between stock? In common stock, I'll explain first Aramco's. Let's say today's price is 32, right? Yes. Have anyone received Aramco's dividend? Anyone know what is a dividend? Can you just type and let me know? How much dividend Aramco's paid? You received this at the end of 2019. Oh, sorry, yes. Did they pay any dividend? Are you listening to me? Do you know that Aramco pays some dividend? Yes. Now, what is a dividend? Dividend is basically part of profit which is distributed to shareholders, right? Let's say Aramco gave, I'm just saying as an example, 1 real for 1 share, 1 real per share. Aramco's gave in 2020, at the end of 2019, let's say on December 31, they gave a dividend of this one here. Right. So December 31, Aramco gave a dividend of 1 real per share. Okay. This is in 2019. Maybe end of 2020, I'm not sure. Let's say they gave a dividend of, instead of one, maybe they say we gave a dividend of 2 reals per share. Right. Depends. It could be different, right? Two thousand 2020, let's say 2021. I'll mention here. Okay. Let's say the dividend is 1 real here. In 2020, they gave 2 real. In 2021, maybe their profit was not high. They gave nus halala as an example, right? Now, if you see here, the dividend is not fixed. It depends on the profit, right? Whatever profit, it depends on that one. Okay. So dividend is not fixed. This is the characteristics of common stocks. In Saudi Arabia, we have common stocks. We don't have preferred stock. Now, what is preferred stock? In preferred stock, the dividend is fixed. You know it when you purchase. These are special type of shares. These are special type of shares issued in US where your dividend, you know it from the beginning. Right now in Aramco, we don't know what will be the dividend. There is no commitment. They can provide a promise that, okay, we give you this dividend, this. They provide you a promise, but it's not commitment. It's not the obligation. It's not must that it must be 2 real or 3 real. It depends on profit, right? No, bonus is different. Dividend is, any company when they have a profit, either they reinvest in the business or they give it to the owners, right? So when they give it to the owners, they call it a dividend, right? Part of a profit of Aramco's distributed to shareholder is a dividend. Okay. Now preferred stock, your dividend is not fixed, is fixed, right? Like in our example here, I'll come back to our example here. See, what is a preferred stock? It is 6% of 100 par value. So they issued 1000 preferred shares. Total number of shares is 1000, right? So it is, dividend is 6%. What is a par value? Par value means at the price which we sell. In Aramco, it was 32 as an example, right? Here, preferred stock, their par value, the value is 100, and they said we'll give you a 6% dividend. So you get a dividend of 6% of 100 is 6 real is the dividend, right? And in our example, every year they get a fixed dividend of 6. whether in 2019, 2020, 2021, dividend is 6 fixed. So our dividend is fixed. This is under preferred stock, right? 666. When we purchase a dividend, right, this is a special type of shares, not here, right? So coming back to our question, 6% of 100 you get a fixed dividend, right? So this company, they issued 1000 shares. This was their total value, right? So 1000 times 100 is this one, right? So but the dividend you get 6%. Common stock is 15 par value, right? And 10,000. So this is the total value of your common stock, capital surplus, and retained earnings. I'll come to it later on. But now the question here, I'll come to it. What is current liabilities? This was the question. So current liabilities in this sections are these three items. If you add these three, this is your answer. Okay. This is the answer of yes, correct. Now next one here, it says current liabilities. We are done with this one. Next one is working capital. Okay, what is working capital? I'll explain again. Working capital is current assets minus current liabilities. This is the formula for working assets. Working capital, sorry. Right, working capital is current assets minus current liabilities. Right, so working capital is current assets minus current liabilities, and we already solved it. I'll explain more in the next slides. I'm going to continue with slides. It is there, more explanation. I'll come back to that one as well. But right now, only you need to understand the formula, which is current asset minus current liabilities. Right, so we already know what is current assets. We solved it. Current liabilities. So this minus this is the answer. Next one is shareholders equity. What is shareholder equity? We'll go to again same section and see what are the items. Now this section has both liabilities and shareholder equity, because assets have both assets. One is assets, because we know that as per the rule, total asset, total of this section equal to total of this section. But this section has two parts, liabilities and shareholders equity, right? Now what is shareholder equity? We look at these items. Shareholders equity, Ras Al Mal, which is this one. Okay, this is all belongs to shareholder equity, means about shares. This company has preferred stock, a special type of shares where dividend is fixed, common stock, just like a common stock, capital surplus, and retained earnings. I'll explain what is capital surplus first. Again, we'll come to our favorite examples for Aramco. We all know that Aramco's share price is, we all purchase, right? This is what we purchase, 32. Is it clear? We all purchase the share for 32. Anyone has any question? No, it cannot be have negative. There is no negative. It is a loan. Loan is not negative. The loan is there. Yes, Abdullah Hussain. I'm going to enable a voice. If you can talk to me, yes, it's there. So if you want to talk to me, ask a question, you can use this one. Yes, working capital can be negative. Yes, working capital, it's just a number, can be negative. Yes. Yes. Okay, now coming back, I'm going to explain to you what is a capital surpluses. We all know in case of Aramco that we purchase a share of Aramco, right? Now, share of Aramco, there is a concept we call it par value. Normally in a market, par value is what is written on a basic value of shares. What you pay is something high, right? If you look at case of Aramco's, normally in Saudi environment, we have 10 real is the par value, right? This is what we should have it. Why they sell it for 32? Because of Aramco's brand or Aramco's strength, whatever, they sell it at 32. Normally in Saudi market, the minimum value, right? You can search it as well on internet. What is a par value? Par value is a token value, which is normally we put it at a very low, right? That in case, theoretically we call it, in case, in theory, if you want to return your share to Aramco, as an example, in theory, right? They are, they will give you 10 real. The par value is 10. If you go back and return your share to Aramco, they'll give you 10 reals because this is the par value in Saudi market, right? Why they sell it at higher price? Because this is what they think this should be the price because of their brand. You can put 32, you can put 20, you can put 40, whatever. But they decided to put it at 32. So this, what is the extra here? Do you know what is the extra amount they sell it? We can find out, right? The difference between 32 and 10 is 22, right? So this is what we call it surplus. So what was the surplus capital? Okay, so understand this one. 10 is par value and 22 is surplus. And total 32 is the market value of the share when it was sold. Not today. Today may be different, up or low. We don't know. Price can be whatever in the market, right? So 32 is the market value when they sell it, but par value was 10 and 22 was surplus capital. So now I'll come back to this question. Right, coming to this question. This question, what is their capital surplus, is 150,000. Now capital surplus is for common stock, not for preferred stock. Always for common stock, remember. Okay. Now I'll put the same information for this example. What is their common stock? 15 par value. Let's say in our example, the question company. The question I'll just write here. Question. 2.1 question company, right? Do you know what is their par value? Yes, Ahmed, if you can ask me through using your mic, it would be better because I don't have to come to this screen. If anyone has a question, because I'm on the Excel screen, so if you have any question, just ask me through voice message, right? Okay, now in the question itself, what is the par value of 2.1 question here? If you look at a question, 15 is the par value. I will just write it here, 15, right, which is given. What is the surplus value? We don't know. Do we know what is the surplus value? The total amount is given, right? What is the total capital surplus? Is 150,000, right? This is given. The total amount, not like 22 for Aramco's, right? We don't know what is the capital surplus for one share. Can you tell me what should be the capital surplus for one share? How many shares they sell it? 10,000 shares. So total amount is 150, right? So we can find out, right? Common shares, not preferred shares. Remember, only common capital surplus is from common stock. So what is for one share? Yes, can someone answer what is a capital surplus using voice? No typing, please. What is a capital surplus for one share for this question? I'm solving the question as well. Yes, anyone? Any answer? Are you listening to me? Yes, Ahmed, 15. Yes, it is 15, right? How we calculate 15? 150 divided by 10,000, right? Total shares, right? Is total shares are 10,000. So we divide 150,000, right? We divide it by 10,000 and it is 15, right? Is this clear? This now, capital surplus. Is it clear to everyone how we get this 15? Okay, so it means what was their market value when they sold the shares? It was not given this information, right? Can you tell me what was their market value when they sold the shares? Yes, it is 30, right? So their market value is 30. Is it clear this one why we get 30 as market value? Is it clear to everyone? This is very important actually. Yes, Saad. Why it's not clear? Saad and Ahmed Kazim. Yes, please ask. Use your mic. Yes, Saad and Ahmed. Why it's not clear? Please use mic. Actually, I don't have. I'll go to the other screen. How did we get 30? 30 is par value of 15 and 15 is 30. Just like Aramco's is 10 is the par value, 22 was the excess and 32. In case of Aramco, we all know the market price. But in our example, we don't know what was the market value. In this question, it was not given. What was given is this one, this number, and this one, right? So from this one, we calculated 15 as a par value for one share, and then we plus these two items. 15 plus 15 is 30. In case of Aramco, it was 10 plus 22, and 32 was the market price. Okay, clear. Okay, so any question? Okay, now I'll go back to our question. So this one was capital surplus, right? Clear now for capital surplus. Now what is retained earnings? Okay, I'll go back again for Aramco. Let's say Aramco's, let's say Aramco profit for 2019. Let's say last year it was, I'm just putting some number, it was 50 billion reals, right? This was their profit, right? So their profit was 50 billion. Now who takes the profit? Who should take a profit for Aramco's? Yes, the owners. Remember, whoever is the owner, whether it's a government or shareholders, right? So profit should go to owners. Now, before you take the money, put it in your pocket and enjoy it. You have an option. You want to reinvest all of it, reinvest in the business. You want your business to grow as well, right? You want your Russell Mal, your capital to increase, right? So now you have a choice either to take all, or let's say you take, I'm just saying 10 billion, you reinvest now, and 40 you want to, let's say you want to decide it like this one, right? 10 billion is a reinvestment, we call it reinvest, or you retained it, right? Retained earnings, retained profit. This is another name. Profit, you retain it, you reinvest in the business. This one, it's the same thing, right? So you decided that out of 50 billion, right? Sorry, we are running out of time. I'll finish very quickly. So now reinvestment or retain 10 billion is reinvestment, and 40 billion you decide to give it to owners as a dividend, we call it. This is what we call it, dividend, right? And 40 billion you divide it by the number of shares, you total whatever number of shares, 40 billion divided by total number of shares, then everyone will get based on whatever shares they have. This is what we call it, retained earnings. 10 billion means reinvest in the business, and 40 as dividend. So profit is divided into two things, into retained earnings and into dividend. If you add dividend and retained earning, it is your profit. Now coming back to our question here, this company retained earning is 70,000. The profit they reinvest in a business. So these are all part of their capital account. We call it shareholders equity account. If you add all 1, 2, 3, 4 items, this one, shareholders equity or capital of owners, these are all capitals. So this one is basically an answer to, I'll show this one. Okay, so, and part B here in this question, if the firm had an income of 500,000 after taxes, what is the earning per share? Earning per share or profit per share? Do you know how many shares you have? Common shares, remember this one, you use it, this is your total income, divide by total number of common shares, which is this one, 10,000. So 500 divided by 10,000 is your earning per share, very simple. Part C says, when the firm issued its common stock, what was market price of the stock? We already solved this question here. What was the market price here? This 30 is the answer of this last part. So this one here, this 30 market value, how we solved it, the same concept. So we solved 2.1 now. Part D, we are solving it, just cancel part D. It's a cash flow statement. Here in this course, we only take income statement and balance sheet. So part D is no need to calculate now, right? So cash flow, just cancel part D. So part A, B, and C, we solved it, right? And it is already mentioned in our slides as well. I'll go back, I'll stop sharing the screen. I'll go back and show you that how we finished this question. So almost we are done. We solved 2.1 as well. I'll show you on the slides as well. The same thing what we discussed, we already solved it. So this is 2.1 on the slides in front of you, right? So this is the answer of total assets. Sorry, this is not. This is total assets. This is current. Sorry, not this slide. This was just an example. Yes, this is what we solved already. Current assets, we already solved it. Current liabilities, already from that explanation. Working capital, shareholders equity, adding all them, earning per share, and part C is the par value, which we already solved it. This is just a final answer. How we calculated, you can refer back to my recording as well as that Excel sheet. Market price. So part C. So this is what we have done. This is very important for your understanding. Try to resolve this question. Next class also we'll solve some more questions. Now, if you have any question, please feel free to ask me a question. Okay, we are done with the time. Okay, any question? Yes, anyone has any question, please feel free to ask before we close our class. Okay, what is par value? Okay. Yes, class is recorded. Yes. Quiz after we finish this chapter number 2. Quiz will be there from chapter number 1 and 2. Most probably next week, but still it's a long chapter. We need to finish this chapter first, then we'll have a quiz. Yes. Now I'm coming back to a question of Ali Muhammad Al Nazir. What is a par value? Yes, those who want to leave, they can leave. If you have a question, then I'm still here. Yes, those who want to leave, they can leave. I'm going to ask the question. I'm going to answer the question which was there before. Okay. Yes, now I'm giving the answer to Ali Muhammad Al Nazir. He asked about the par value. Par value is a theoretical value, remember, issued to a common stock. Now, par value is very minimum amount, right? That in theory, if you, it's not possible normally, but in theory, you know, that if you have to return something, you can take back that amount, right? Now, for example, normally in the markets, in Saudi market, the par value, the theoretical value of your share is 10 real. But normally companies may sell more than that one. When they offer for the first time to the public, they can sell it at 12 real, they can sell it at 15 real or 30 real, right? So could be any amount based on what they expect market to pay to them. This is what we call it a par value. Ali Muhammad Nazir, is it clear or still you need more explanation? Okay, thank you. So anyone else has any question? And, as far as your attendance is concerned, I think you'll not be marked absent. Abdullah Al-Ghafli, right? Abdullah Hussain, right? So no, you already joined the session, so it was there. So the whole record is there. So I don't think you will be marked as an absent. Yes, if you want to leave, you can leave. Anyone? If you don't have a question, then it's okay. I'm here if you have any question.
Doctor, bar value, that's mean is a possible or يعني or expectation value that before we do the work.
Which one? Can you explain? What was the you said in the beginning?
I mean bar value. Bar value, you mean?
Profit?
That mean what you explain. Is value or something like that.
Actually, your voice is not clear. Can you mention the slide number? I can go to that slide and answer your question. Just type at least slide number where you have, or just type it here because your voice is not clear.
My voice.
Ahmed Ibrahim. Yes, you can type it or something because your voice I cannot understand. Just type it. Okay, I'll share the book as well. Ahmed Qadim, I thought there are some students, they have the book as well. But I will upload on Blackboard. Okay, I'm going to upload the book as well. If someone, some student asks for the book, so I'm going to upload it. I will just leave it there for a short period of time. So I will remove it because of its size. So the book is there. Yes, Ahmed, par value is, yes, it's a share's guess value. You can say, yes, it is theoretical value of a share. Yes, not a real value. It's a theoretical value of a share which normally put at very minimum amount. Yes, it is 10 real normally in a Saudi market. Yes, those who want a copy of book, it is available. Ahmed, you asked for a copy of book. I uploaded on Blackboard. Also, there are some students who have the copy. If they want, they can share with the engineering economics WhatsApp group as well there, because it's not good to share it here officially because it is not allowed, right? Because of copyright. This one I will just keep it for a short period of time, then I will remove. But if someone has in the group, they can share in the WhatsApp group. If no question, then I'm leaving the session. Best of luck and see you inshallah in the next class.